Hey, everybody. Welcome to the weekly wrap up. My name is Gareth Soloway, Chief Market Strategist here at verifiedinvesting.com. So it was a day to remember on this Friday. We saw the market starting off a little bit worried about an attack by Trump on the Chinese on social media, but the markets tended to shrug it off, and that's what we're seeing more and more. So what we saw is the markets opened slightly lower. Now, we also got the PCE data out, and the PCE data did not show any spike in inflation. In fact, it was even slightly lower than investors had worried or forecast. So again, economically, we're not seeing the inflation bug yet. We're not seeing a major spike in unemployment. So it's really the market focusing in on trade news, right? So again, whether it's Trump talking about deals with China that aren't going according to plan or other countries. In fact, remember last Friday, we had Trump threatening to impose 50% tariffs on the EU, which then he walked back on that last Sunday leading into the holiday here on Monday. So what I'm seeing more and more, folks, and we'll get right into the charts, is that the markets and investors are caring less and less about the day-to-day tweets, the day-to-day chatter, the day-to-day threats, and they're focusing more on the economic data. So as long as the economy stays relatively strong and inflation stays in the box, then the markets can grind up. However, the second we see economic data, and we're going to get the jobs data next week, the second we see that economic data start to wither and collapse, the markets are going to freak out. But what does that mean? It means that these tweets or these social media posts by the president, they have less and less impact on the markets. And again, that's something that we all just need to be aware of. All right, let's dive into the charts here. As we go into the charts, we can see this is the S&P. So we opened a little bit lower. Again, the kind of the rage tweeting by the president kind of initially causing some sell-off, but the PCE data calming nerves. We chopped sideways for the good portion of the day. We then had a midday swoon where the markets came in sharply, and then we rallied the rest of the day. And lo and behold, if we go back to the daily chart, we are now green on the day. So the S&P right now, with about 2 minutes to go, is now up about just over 0.1% or 7.5 points. All right. So again, market shrugging off the fears from tariff threats, and focusing more on PCE, more on economic news that has been better of late as the stock market has given the consumer a bounce as well. Now, next week, what are we looking at? We have to continue to follow 59.65. This level right here is the key one to monitor. If we close a daily close above that level, the odds will strongly favor a move up to double top the all-time high. As long as we stay below, the market's all vulnerable. But keep in mind, the only thing that I'm seeing that's going to take this market down at this point would be negative economic data. And again, remember, next week, we're going to get the jobs data. So the non-farm payrolls report, the unemployment report, ADP private sector, JOLTS data, all of that will come out next week. And that will be very, very key to the market action and how we view our economy, essentially, and how things are going. All right, flipping over to the dollar very muted today after yesterday's gap up and swoon back down. We can see that, again, the dollar is basically flat. Yields continue to creep back down, which is a small positive for the markets as well. Remember, investors cheer low rates. Low rates equal cheap money. The market likes cheap money, and therefore any sort of downtick in yields, it's generally met by optimism from investors. Interesting on NVIDIA. So NVIDIA gapped up yesterday on earnings right into this pivot high right here. And since then, it's been straight to the downside. So again, it's not down significantly, I mean, overall, but it's just interesting to see how they actually had a very good quarter, but the stock had rallied up so much that there was just profit taking. Once it hit resistance, there was a lot of sellers that came out of the woodwork and have pushed it back down. But even in spite of the NVIDIA trade going down today, the markets were able to fight off of the lows and rally back to the flat line. So just interesting on that front. If we look at other tech stocks like Tesla, Tesla's also at the lows of the day today as well. So very interesting dichotomy here where the S&P, which is more industrial stocks and other stocks like that, have done well, but technology in particular has struggled a little bit. And we can even look at Microsoft. Microsoft is basically flat to positive, but certainly not resoundingly green. Meta today, Meta is up a little bit, but only up 0.25%. So again, a little bit of a lag in some of the big cap tech, while we're seeing other areas of the market perform better here today. All right, let's go over Bitcoin real quick. Bitcoin continues to move lower. We talked about this in the game plans over the last couple days. You had your reversal candle, 1, 2, 3, 4 inside bar action here. That's bearish flag consolidation. And sure enough, it played out. Notice where it's finding support, at least for now. Notice this sideways chop. That's exactly where we're finding support on Bitcoin. So Bitcoin, again, finding technical support here on the markets or on this technical level here on the charts. All right, now, again, it doesn't mean this can't break lower. If it does, we're probably headed down to this 97,000 level. But this does at least give the bulls an opportunity to push back and try to push Bitcoin up and get it to this resistance trend line around 114,000. But again, classic short-term little bearish pattern playing out to the downside the last couple days. Beautiful action right there. Gold today down slightly on the day. Again, generally we're seeing markets flat to positive, and so we are seeing, again, gold selling off just a little bit. Please keep in mind that off of this big up move that started out in December in gold, this is sideways consolidation. So if you look at gold, you can see how you had this big move from about 2,500 to start the year all the way up to 3,500. So that's a big move with only like little kind of multiple day pullbacks along the way until now. This is a real good quality digestion period in gold. And it likely, as long as it holds above 3150, 3140, it is setting up for another leg to the upside. If it breaks this 3150, let's say, now you start to look at maybe 2,900. But as long as it holds this level, the bias remains on the charts to be bullish. Let's take a look at silver next. Silver down on the day, but continues its consolidation. Classic consolidation right here. So we'll keep an eye on that. And again, just watching to see where this goes, if it can see the bull flag breakout take place and head towards 34.50 and possibly as high as 37 to 38. Oil today, very little movement. In fact, almost perfectly flat on the day. Same thing for the last couple of weeks, very little price action as, again, the markets are trying to figure out, okay, are we going to have a recession? Are we not going to have a recession? Is OPEC going to increase production? Are they not going to? What are the key metrics here that are driving price? Now, again, the key to remember for us that are technical investors is that here's your big down move that broke major support going back on the charts, basically multiple years. Like, look at how many times we hit and bounced off of this level on oil. Well, now we've broken it. And what that tells me as a technician is that you have to now respect 65 to 66 as major resistance, and the price action is looked at as being bearish, right? You have your down move and then essentially sideways consolidation right here, right? This is all sideways chop off of this breakdown chart here. So again, that generally would give me a negative bias on oil for an eventual move lower. The question is, when will that happen? Will it be next week, next month, next year? We don't know at this point. We got to wait to see when the price starts to make a move. And then if we look at natural gas, this is your intraday chart, but let's flip over to the daily chart. The daily chart, again, a little bit of downside here, but if you look at this, right, this was your support level. It respected it here and over here. Great trend line. So if it does come down, this would be support around 310 on natural gas. And then you have your resistance level here, which, again, if we look at this, it's pretty cool, right? You had your support here and your support hit here. It then broke and this became resistance. So same thing, if it hit up here, and that's the wrong angle there, but essentially if it hits that level, that would be a resistance point to monitor, right? So you'd expect rejection right here and support right here on the price of natural gas. Just checking in on the S&P. The S&P did sell off into the end of the day, closing, get this, guys, down a whole 50 cents on the day. That's about as quiet end of day as you can have. What's interesting here on the charts is that we were down on the S&P over 1%. The NASDAQ was down about 1.5%. But when all was said and done, the markets fought back, ignoring worries about trade, ignoring worries about inflation, which, again, right now is not showing itself via the PCE data, and is basically content to just wait until next week to get that jobs data in the book. So that's going to be the key driver next week. I'll be looking at the charts, seeing how things go into the jobs data, but jobs data is going to be the focus because, again, the question is, will we see an uptick in inflation, in unemployment, or are we going to see, or also an uptick in filings for unemployment, as well as maybe even a hiring freeze? Are we going to see the hiring numbers come in? Or are we going to have a negative job growth next month? So we'll watch and see, or I should say this past month. Okay, guys. So next week, I'll keep you guys up to date in the game plans each morning. Thank you guys so much for tuning in to the weekly market wrap up here at Verified Investing. I'll talk to you soon. Take care.